Good evening, everyone. Welcome to the live coaching classes organized by Board of Studies, ICAI. Today's evening, we shall be having our discussion in relation to the place of supply, Series 2. Last session we had on 16th of December, where we have discussed on the provisions of place of supply in relation to domestic transactions. So today, this evening, we shall continue our discussion on the same topic with respect to cross-border transactions. Before I start with, let me have a confirmation from you. You are able to see the screen and you are able to hear the audio properly. I'll wait for a minute for the confirmation, then we will start with our discussion, right? Meanwhile, you have any queries in relation to the discussion on the previous session, you can please put into the question window. I shall be addressing those questions as well. I could see that couple of questions have been put in relation to our previous discussion. So in the process of our discussion, I shall also cover those aspects which are put into the question window. So I haven't received any confirmation yet. I'll just wait for another 10 to 15 seconds. Good. Thanks for the confirmation, Janaki, Surya and Priya. Good. Well, I have 4 questions already posted in continuation to our previous discussion. So what I will do, we will have a recap of our previous session with respect to the domestic transaction. Later, we move on to the discussion on import and export, cross-border related transactions. So what I will do, I'll have a quick recap of our previous discussion. And in the process, there are a couple of questions which are posted in today's window. I'll also have quick glance through those questions, and then we will come on to the cross-border transactions. Now, with respect to domestic transactions, we have two supply of goods, supply of services. So with respect to supply of service goods, we need to refer section 10. As we have discussed in the last session, this section 10 has got 5 subsections, 5 limbs, meaning 5 homogeneous transactions, right? So what is the kind of transactions? First is with respect to supply, where there is a movement of goods. This is covered in clause A, section 10, subsection 1, clause A. With respect to this movement of goods, we had a discussion on the supply where the goods which are sold at shop can be taken to the customer's premises for delivery. We also had a discussion with respect to sale of goods where customer gave an instruction to give a delivery at the particular premises. So that those are the examples we discussed on movement of goods. Then the second limb we have is supply, which involves delivery of goods. The delivery of goods to a recipient or any other person on the instruction of a third person. We had a discussion on this, if you recollect, the ex works CAF or FOR transaction. Also, we had a discussion on bill to ship to transaction. We had a discussion on there is a supplier A who is there in Delhi. There is a customer C in Tamil Nadu. In between, there is a customer called B who happens to be a supplier of C who is there in Haryana. So the Delhi party makes a delivery at Haryana but bills to Tamil Nadu. We had a discussion of that example with respect to supply which involves delivery of goods either to the recipient or any other person at the instruction of a third person. In the process of this particular discussion, we had studied a definition called recipient. Section 2, clause 93 is very important. I would recommend all of you to have a glance through of this particular definition called a recipient. Moving on, we had discussion on this particular clause called supply, where there is no movement of goods. We had a discussion of this sale of furniture, which is assembled at a particular site. We had discussion on sale of DG set. When a tenant is vacating the premises, there was a landlord called Rise and Co. So this landlord is in Delhi, and this particular DG set was owning by the tenant in Uttar Pradesh. So we had a discussion on this sale where there is no movement of goods. This is the third limb which we had discussed. Fourth limb we have discussed on the goods which are assembled or installed at site. So we had a discussion on this what do you call the tank in case of a petrol bunk, which is of big size, which cannot come as it is as a tanker. You get the steel sheets which gets assembled at a particular site. Then the last limb we had is the goods which have been supplied on board or conveyance. With respect to this goods which have been supplied on board or conveyance, we have understood that the place of supply shall be the place at which the goods have been taken on board. We had an example on Rajdhani Express. Assuming that if there is a train which is starting its journey from Delhi to say Kanyakumari, in between somewhere in Nagpur, the goods have taken on board. That shall be the place which is identified as your place of supply. So with respect to this place of supply for goods, these are the 5 limbs which we have duly discussed in our last session. Moving on further, in relation to services, we had various notified lists. We had services right from subsection 3 till subsection 14. I repeat, in case of services, we have discussed that there is a general clause called subsection 2. There is a notified list right from subsection 3 till subsection 14. So we will just have a glance through of this notified list. In the process of glancing through, I have a couple of questions posted by some of students. I'll address those students as well. So with respect to subsection 3, when there are services rendered in relation to immobile property, students, please bear in mind, when we are talking about this domestic transactions, especially section 12, as I discussed through, I would recommend you to make a running notes so that it will be easy for you to recollect the examples along with the concepts. So with respect to immobile property, the place of supply shall be the place where immobile property is located. There's one question which has been posted by Namita. She was asking with respect to this immobile property. So can you please elaborate right to immobile property? What is covered in this particular right to immobile property? So with respect to this particular aspect of immobile property, there is an entry called right to immobile property. Like we have a landlord, there is a builder who comes for construction activity. Now, when the builder is doing a construction activity, there's a right to use immobile property. So this is a right which they are bringing into your classification in terms of identifying the right to use immobile property. So one example, Namita, is in relation to your right which was given to a builder for the purpose of undertaking the construction activity. That is your right to use your immobile property. This is your subsection 3. Subsection 4 talks about your performance based. So we had a discussion on a couple of aspects like your catering, your personal grooming, fitness, beauty treatment, etc. So with respect to these aspects, where the activity was performed, that shall be called as your place of supply. We had a discussion on an example in relation to PV Sindhu, where this performance related activity, where a fitness coach follows along with PV Sindhu, how we identify the place of supply. Next, we had this subsection 5, which talks about your training and performance. Couple of aspects we have discussed in relation to this training and performance way. Tally Education Services Private Limited, which gives a training center to a registered person, then the place of supply shall be such registered person. In case if this training is not done to a registered person, a non-registered person, the place where the event, the training has been performed, that shall be called as your place of supply. So we had a discussion on this particular training and performance. Then we have the next limb called subsection 6, which talks about your admission. Admission to your cultural, education, artistic, sporting, these kind of entertainment events, where that particular event is held, that shall be held to be your place of supply. Not much of confusion will be there with respect to your subsection 6. Subsection 7, we had a discussion on organizing of events. We had an example in relation to ISRO, where a event management company conducts an event to ISRO. Also, we had a discussion in relation to DRDO, assuming that DRDO has got its business operations, say in Maharashtra, Tamil Nadu, and Madhya Pradesh. With 3 states, when there is a event which has to be conducted, how we identify the place of supply. With respect to this, the subsection 7, organizing events, please keep in mind, when the event is performed to a registered person, the place of supply shall be such registered person. Remember the cardinal principle of GST law. GST law says that destination-based taxation. So since the event has been performed to a registered person, the place of supply happens to be that particular such person. In relation to a person other than a registered person, where the event has been actually performed, that shall be called as your place of supply. Next, we had an opportunity to discuss on this element called transportation of goods. Transportation of goods, we have 3 entries we need to keep in mind. We had first entry, where if the services are rendered to a registered person, then that shall be the place of supply. In case if the services are given to an unregistered person, we had a discussion on example where Mr. X, who happens to be a native of Kerala, assuming for a moment he books a transportation of goods from Delhi to be delivered to Kerala, then the place of supply shall be the place where the goods are handed over for transportation. So this gentleman, Mr. X, since he is residing in Delhi, and from Delhi he has to send some goods to Kerala through this transporter called Gati. We had a discussion that Delhi Union Territory happens to be the place of supply. So in addition to this subsection 8, we had one example discussed where if the goods are meant for delivery outside India, my place of supply happens to be outside India. Wait and watch for a small question with respect to this subsection 8 called transportation of goods in case where a transporter is in a state, the recipient of supply is also in the same state. However, the goods are meant for delivery outside the India. I'll just come to my Excel file to make it clear for you from your examination point of view. See, hope you are able to see my Excel file. Hope you are able to see my Excel file. Yes. For a moment, let us assume that supplier of service and recipient. Supplier, say Gati, or I take an example of DHL, and recipient is Mrs. ABC Private Limited. DHL is registered in the state of, say, Tamil Nadu. Recipient is also registered in the state of Tamil Nadu. And Mrs. ABC Private Limited appoints DHL as a courier person for the purpose of making delivery of goods to a client in Germany. So in this case, applying my subsection 8, since the goods are meant for delivery outside India, my place of supply shall be outside India. That is Germany. My place of supply happens to be Germany. So here, if you see this example carefully, supplier happens to be in Tamil Nadu. Recipient happens to be in Tamil Nadu. Still, because of your subsection 8, which happens to be a place of supply outside India, this shall be called as a interstate supply. I draw your attention to section 7 of IGST Act. I draw your attention to section 7 of IGST Act. Applying that particular provision, this particular transaction happens to be a interstate supply. Please do wait and watch for a question from this section 12, subsection 8. Examination, please do wait and watch for this question in relation to determination of place of supply, where the goods are meant for delivery out of India. So this is one provision we had discussed in relation to transportation of goods. Moving on further. After this transportation of goods, we had a discussion on passenger transportation related activity. So any services which are rendered in relation to a passenger transportation, we have discussed again two aspects. If the services are rendered to a registered person, the place of supply shall be such registered person. Rather, if the services are rendered to an unregistered person, the place of supply shall be the place where the passenger embarks on the conveyance or boat which is meant for a continuous journey. With respect to this particular passenger transportation, there is one question which was raised by Namita. So what if there is a flight from Delhi to Bangalore, if there is a flight from Delhi to Bangalore, and this particular flight, which is a continuous journey, in between, if there is a technical issue at Agra, the flight lands at Agra, the passenger disembarks the flight, again they start the journey in Agra. For this particular question, Namita, my answer would be, since the passenger has embarked on the flight at Delhi, that shall be called as your place of supply. Because of a technical issue, even though flight stops at a particular location, they happen to change the flight for whatever be the technical reasons, my place of supply shall not be disturbed, right? So with respect to this question, what you have asked, Namita, though there is a technical issue, change of flight at a particular point in time, my place of supply still happens to be the Union Territory called Delhi. This is the answer to your question, which has been raised, Namita. Moving on further, with respect to the domestic services, next aspect we had on list is your services on board or a conveyance. Please keep in mind, examination, section 10, subsection 1, clause E, which talks about your goods supplied on board. Similarly, in section 12, subsection 10, which talks about services on a board or conveyance. This is the area where most of the time students get confused. This subsection 10 says that the place of supply shall be the location of first scheduled point of departure. I repeat, the place of supply shall be first scheduled point of departure. Now here, I have a flight right from say Bangalore to Kolkata. The first point of departure happens to be Bangalore, Karnataka. Then my place of supply happens to be Karnataka. So with respect to any services which are given on the flight, example, so when I get onto the flight, I would like to have some meal, some snacks, or I would like to watch a movie. I would like to get some massage. Now, whatever be the services which have been provided on a board or conveyance, the place of supply, they have clearly said that first scheduled point of departure. In this particular example, Bangalore being the first scheduled departure, that shall be your place of supply. Again, this is a continuation to your question, Namita. Place of supply happens to be Karnataka. Though there is a break in the journey, if any technical reason, what was the first scheduled departure, that shall continue to be your place of departure. And one more question was asked by Namita in relation to subsection 10. So what happens if pizza is delivered on train, on IRCTC? Let me just have that question read for benefit of other students. In IRCTC, Domino's deliver pizza. If berth number is given with the order, will place of supply be placed from train starts or from where station in pizza is entered into the train? The point where train started its journey will be considered as place of supply, or the point where pizza enters into the train, will that be considered as your place of supply? Now, fantastic question, Namita, what she has asked. I would say this particular question, if it is a supply of goods, the point where pizza enters into train shall be called as your place of supply. If it is a supply of service, I repeat, if it is a supply of service, the first scheduled point of departure of that particular conveyance shall be your place of supply. So here, supply of food shall be construed, supply of food shall be considered as your service as per Schedule 2. So considering that point of classification, Schedule 2, read with Section 7, it shall be the point where the train starts its journey. Now, this Domino's, definitely they wouldn't have, if they are associated with IRCTC, Namita, so they would consider the starting point as the place of supply, and they would be charging appropriate tax according to that particular start of journey. Hope this point has been cleared, Namita. Okay. Now, there's one more question from Sairam. In case of organizing event is happening in another location and register located in another, then what is the treatment of place of supply? Sairam, with respect to this particular question, we have to refer to subsection 7, where they say if the services are happening and if the services are rendered to a registered person, the place where the registered person is registered, that shall be your place of supply. Though the event is happening at any other place, because it is rendered to a registered person, that should be considered as your place of supply. I'll give an example. So there is a conference, there is a fair. Now everyone knows that there is a business trade fair where people come together to exhibit their business to get the networking done. For a moment, let us assume that there is a tooling business fair which happens in the state of Maharashtra. I happen to be a tool manufacturer in the state of Bihar. From Bihar, I would like to participate in that particular trade exhibition. Now, I get an opportunity to interact with customers like DRDO, ISRO in the particular trade fair to present my strength of a tool performance to get orders from the big clients. Now, when I participate in the trade, I need to pay something called your blocking a kiosk in the particular exhibition where the kiosk is organized. Am I renting the kiosk or am I participating in that particular trade exhibition? If you look at the nature of contract, my interest, like I am a registered person in Bihar, I would like to participate in that trade fair where a kiosk will be provided for me to keep my goods for display, where I can interact with the prospective customers to display what is the strength I have with respect to the tools I manufacture. So with respect to this, since the trade is happening in Maharashtra, the person who is organizing the trade, he charges IGST, considering that place of supply happens to be Bihar. The event is happening in Maharashtra, Saira. Event is happening in Maharashtra. The registered person is in Bihar. Since the services are given to a registered person in Bihar, it would be considered as to a registered person, that is, place of supply happens to be Bihar. So to answer your question, Saira, this is an example with justification why that subsection 7 has to be applied. Right? Namita, yes, it is section 7 of IGST which deals with your interstate supply. Clear? Okay. Then moving on, one more question has come from Janaki. What in case of connecting flights, means of Delhi, Bangalore? They just talk about your, the first schedule point of departure. Now, though there is a connecting flight, my journey is from, say, Bangalore to Delhi. Bangalore to Delhi, I can go directly from Bangalore to Delhi. I can go from Bangalore to Hyderabad, change a flight. From Hyderabad, again, I get into a flight, connecting flight to Goa. From Goa, I get a connecting flight to Delhi. Now, here, from Airways point of view, the point of first scheduled departure happens to be Bangalore. Praveen, Indigo, from Indigo's perspective, Praveen needs to be transported, from Bangalore till Delhi. In the process of this, if any services are given to Praveen, like supply of food or with respect to your any other aspects, now they just see that where is the first scheduled point of departure. Now in the record, in the database, if you see Janaki, it will be very tedious to track. Praveen has deboarded at Hyderabad. Again, he boarded flight at Hyderabad. Again, he changed his flight at Goa. Again, he got into flight at Goa. This sort of tracking becomes very, very tedious. For that reason, they just say, look at the first point of departure, let that be called as your place of supply. Because services are very complicated to travel through the chain link. That's the reason they say in subsection 10, the first scheduled point of departure. That's the place where I identify my place of supply. Hope this point is clear, Janaki. Moving on, telecommunication, I have made very clear. Telecommunication, let us identify into three sectors. One, a lease line, where there is the installation of your lease line or a fixed telephone line. The place where your fixed telephone line or lease line is installed, that shall be your place of supply in relation to telecommunication services. So what if it is in case of mobile connectivity, that is your postpaid. In relation to postpaid, the address which is there on record, that shall be your place of supply. So what if it's a prepaid? Prepaid, we have various mode where the services are sold. Like the prepaid activity, the services are sold through an agent, that is your distributor, or it is sold through a particular recharge points. It is sold through some vouchers for the purpose of filling your prepaid services. So the point where the sale, the distribution happens, that shall be your place of supply. That is how we identify telecommunication services. Banking and financial services, very simple and straightforward. If the services are rendered to a registered person, that shall be the place of supply. If the services are other than a registered person, the address which is available on records, that shall be the place of supply. Similarly, with respect to insurance services, if it is rendered to a registered person, that shall be the place of supply. Other than a registered person, the address available on records, that shall be the place of supply. Now, last point, one aspect which was touched upon in relation to advertisement, where one of the student called Janaki asked, can you elaborate a little more on this topic called advertisement? The most complicated, the most, I would say, homework involved in terms of identification of place of supply is this subsection called 14, that is advertisement in relation to central government, state government, or local authority or local agency. These are the services which are little complicated in terms of identifying. Like example, when we talk about advertisement, I was telling in the last session, there was one question which was asked in the parliament. Can you tell us how much is the budget allocated for advertisement? We see roughly around 8,000 crores was spent in the last span of 3 years. Now, last year itself, around 1,250 crores was spent on advertisement with respect to government schemes and policies. So you have this Jan Dhan Yojana, Fasal Yojana, or Bima, insurance. All these particular schemes need to be communicated. It should reach to rural area. Now we have something called Man Ki Baat, where Honorable Prime Minister used to interact on every Sunday with the citizens of India. Now, how does this reach to the citizens of India? We have various modes of communication. One is print media. Second is your internet. Third is your television. Fourth is your radio. Fifth is your SMS. So there are various ways where these advertisements get campaigned. So this particular, I draw your attention. If you have the institute material, I would recommend all of you to have your institute material in hand when you are attending these classes. For the simple reason, you can make a running notes as you listen through the examples what I'm going to discuss through. So I'll quickly take a couple of examples, Janaki, to give you a glimpse how these advertisement services are vivisected to identify the place of supply. Now, I could have advertisements, say for example, advertisements through a train. If you look into a train like a Jan Shatabdi Express, if you happen to see this Jan Shatabdi Express, it passes from, say, let's take a point of Delhi till it reaches Telangana, say Hyderabad. From Delhi to Hyderabad, so this Jan Shatabdi Express, now on the train, you see on the bogies, there is a campaign written about the government schemes. Now that train was used as a modem of communication for advertisement. So when the train passes from Union Territory, Delhi, till the state of Telangana, the number of stations it passes through Indian Railways, we have the number of stations in each state. Assuming that the train passes through 7 states and 1 union territory, in total 8 places, 8 particular locations. They say how many number of stations you have. Based on the number of stations, you find out a ratio, and that ratio shall be used to allocate the place of supply. I'll just come to my Excel file to make clear how this calculation, how this computation is done. So with respect to your train advertisement, say there are 7 states and 1 union territory. And in total, say there are 780 stations. So what they do, they allocate the 780 stations among these 8 places, and they derive something called ratio. And assuming that this ratio works out to be like this, say 2:3:2, 5:2, is to say 1. Now, arbitrarily, I'm just taking a ratio. I'm taking a ratio. And advertisement, for putting advertisement on a train, there is an agency who have put this oil painting. So for doing the oil painting on one particular train, they charge, say, 2,50,000. This amount of 2,50,000 would be allocated among all these 8 states in this particular ratio. So this is how I use a particular yardstick for the purpose of my advertisement. Second example. So what if you happen to see the train ticket, the bus ticket, if I buy a train ticket, on the back side of the train ticket, will be written something like Beti Bachao, Beti Padhao. Now it's again, there is a government scheme with respect to say Sukanya Samruddhi scheme. The government is doing a campaign through train tickets. So what they say, if you have done an advertisement through a train ticket, find out how many stations this particular train tickets are distributed on the basis of the number of stations. Each state, see how many stations are there, do allocation of your amount, that shall be your place of supply. So our institute material, page number 5.44, they have given elaborative, detailed examples for various activities. Like I said, advertisements through your internet, through your mobile, through SMS, your newspaper, your radio, television, all these examples have been covered at length in this particular subsection 14. Now, these are 2 subsections, section 10 in relation to goods, section 12 in relation to services are 2 important sections we need to remember for place of supply. Let me go to the next topic. Before that, I'll just quickly see if there are any further questions. Okay. Janaki says she had a question in relation to subsection 9 with respect to your supply of services of transportation of goods. Sorry. Supply of passenger transportation services. If it is to passenger transportation service, okay. In relation to passenger transportation service, if it is given to a registered person, it shall be the place of supply of such person. A person other than a registered person, where the person embarks on the particular boat or conveyance. I gave one example, Janaki, with respect to the break journey. It's tough to find out the break journey. For that reason, they find out the place where he embarks, the customer embarks on that particular journey, that shall be your place of supply. The example which I have gave earlier, same holds good for even subsection 9, Janaki. Just read that subsection 9 with that example. You will get the concept or analogy why they have chosen this particular point of embarking, the place where the customer, the particular service recipient embarks on that particular board or conveyance for a continuous journey. That gives an answer for your question. There's one question from Brijesh. If I board on a train from Patna to Delhi, Rajdhani train starts from Howrah to Delhi. Where is the place of supply? The point where you board into the train, that shall be the place of supply. Where you embark into the train, British. Though the train is from Patna to Delhi and you are embarking at Howrah, that is Bengal. So West Bengal shall be your place of supply. Hope I have answered your question, British. Moving on further. Now, let us start our journey with respect to cross-border transactions. Before I start with this cross-border transactions, I would like to draw your attention to a couple of important basic aspects which we need to keep in mind, which are the basic crux for us to understand why this place of supply is important. If for a moment, if this particular place of supply does not exist, what may happen? Yesterday's session, I have drawn your attention to Article 269A. I repeat, yesterday's session, I draw your attention to Article 269A. This particular Article 269A of Constitution gives a power to levy GST on interstate trade transactions in relation to supply of goods or supply of services. Any nation, if there is no clarity with respect to the border, with respect to the territory, with respect to the jurisdiction, things go way wrong. Every state would like to prosper, but at the same time, when we talk about the taxes, now that generally, if you see this parliament sessions, the budget sessions especially, a lot of expectation is there for the citizen of India. What is there for us? How our nation is performing? How our country is doing? Where are we in terms of growth? What is the planning happening with respect to the prospects of the business, prospects of the individual, prospects of the nation as a whole? Now, for doing all these things, they need to have something called source of funds. Where do I get the source of funds? By way of taxes collected, by way of levies, by the respective state legislature, by the union government as such. Now, taxation, Article 265 is the root for all the taxes, whichever is collected in India as on today. Article 265. Now, having said all this, how do I know? What is this jurisdiction of, say, Tamil Nadu government? What is the jurisdiction of Bihar government? What is the jurisdiction of Delhi Union Territory? When a when a particular passenger comes from Germany to, say, Bangalore for getting a particular service, he wanted to get some design done for his particular project. Or when, say, take example of your Toyota. India is a destination, it's a place for technology. Assuming for a minute, if you happen to see the newspaper for the last 1 week, a lot of news is there that in India, motor vehicle sales are having a slowdown because of non-availability of the semiconductor. Semiconductor is one of the backbone for the success of automobile industry. So when we talk about this semiconductor, there is a integrated circuit. There is a design of a software. There is a technology which gets into the software. We all know that Bangalore is a Silicon Valley of India, where it's known for the technology hub. Say one of the customer from Germany who is into this automobile industry comes into the state of Karnataka for say Bangalore for getting a IC design, integrated circuit design. Now, it is very important for someone to understand if government, when I say government, it could be a state government of Karnataka, it could be a central government. If they want to levy a tax, should it be taxed by the state of Karnataka? Should it be taxed by union? Now, this aspect is something one has to understand. Now, if Delhi government, that is union territory, says, look, this particular client has come to Terminal 3 of Indira Gandhi International Airport in Delhi. From there, he has visited to Karnataka. So it should be with the Union Territory of Delhi. Now, this sort of issues do prop in terms of taxation. Now, for that purpose, not to have this sort of issues, my Article 269A has been brought into Constitution to define what is your interstate trade or commerce. On that particular interstate trade or commerce, that is the supply of goods or services, a levy of GST has been empowered. If this Article 269A doesn't exist, it would have been havoc in terms of identifying this particular taxation on goods imported, taxation on services which have been imported. So this is a backdrop for us to study today's discussion on Section 11 read with Section 13. I repeat, Section 11 read with Section 13. This is what we need to understand. Sorry for a break. Yeah. So with respect to this cross-border transactions in IGST law, we had this Section 11 read with Section 13. These are the two sections which deal with your interstate transactions, cross-border transactions. Before we move on to that, couple of definitions are there which are very, very important for you to understand how this levy is getting attracted. Now, I draw your attention. When we read these laws, there are multiple things where we learn how the nation works. How do the cross-border transactions do happen? How a tax of a particular nation does not get flowed to the other nation. How do we curtail the goods or services imported, not the taxes being imported? These are all the beautiful things which are connected with your constitutional rights. So first to start with, let us look at the definition called imports. The definition, Section 2, Clause 10, talks about your import of goods. Import of goods with its grammatical variation and cognate expression means bringing goods into India from a place outside India. Now, looks a very simple definition, but there is a lot of analogy, there is a lot of debate which happens with respect to this import. So it says, means bringing goods into India from a place outside India. For a moment, if you happen to visit Nepal, if you happen to visit Bhutan, say like Nepal and Bhutan, there is something called a border between Nepal and Bhutan. Say I have a cold drink. Let me not name the brand. I have a cold drink. This cold drink I have thrown from this side of the wall to the other side. Can I call that as import? Say a party who's standing on the soil of Nepal, a party who's standing in the soil of India. So one of my friends who's standing on the other side has thrown a cool drink bottle from that soil to this soil. Can I call that as import? Yes or no? Definitely yes. Goods which are getting into the India for the first time from outside India. So any goods which get into India, that should be called as import of goods. Read with Article 269A, a right vested only with union, not with the states per se. Now this is a clarity which talks about in Section 210. Next is your Section 2, Subsection, Clause 5. Export of goods with its grammatical variations and cognate expression means taking goods out of India to a place outside India. There are multiple questions, there are multiple things people do ask. So what do you mean by taking goods out of India? Do you mean like I have a flight which is I have a flight which takes the goods from India to say Germany. The moment I hand out goods to the this airport authorities, God forbidden, there is some natural calamity. The flight doesn't take off. The goods doesn't leave India. Do you mean that this is an export? Answer is no. It says means taking goods out of India to a place outside India. So the moment you hand it over to the carrier, it doesn't mean that export has taken place. Please keep in mind, filing mere bill of entry, having a shipping bill, doesn't mean that goods have traveled out of India. Only when the goods have crossed the customs frontier, it will be called as export of goods. But for all practical reasons, they say the moment you hand it over, which is beyond your control, that should be called as export of goods. Moving further, export of services. one of the definition which has got multiple exposure from the purpose of service tax, from the purpose of GST. I would say this definition, if you have understood carefully, entire litigation with respect to services is duly understood by you as a professional. Now, as a student who is doing your final, I would recommend have this particular definition thoroughly understood, which is sufficient to take care of your client, whoever is dealing with your export transactions. Let us understand this. Export of services means supply of service, where when the supplier of service is located in India. So to say, first aspect is the service provider should be in India. Only then I can call that as export of service. Recipient of service is located outside India. Recipient is located outside India. So how do I know recipient is located outside India? Example. I'll give an example where there is a website. What is that? This Urban Clap. Urban Clap is one website which is there in India. There is one website which gives part-time services, part-time jobs for the particular work which is done through this particular website. Like Urban Clap, where I enroll as an accountant, any work which comes to me based on the number of hours, like per hour, I charge say $100. The customer who is willing with my quality of service based on the feedback I've received, I get an order from a client. So recipient of service should be located outside India. When I do a work on this particular website, I wouldn't be knowing customer is in India, customer is outside India. All I get to know is some documents come through email. I just look into those documents. I use this accounting software, like say Tally, Zoho, whatever be the software. I just punch the entries into that particular software. Based on that, I get paid for my number of hours which I have spent. So in this particular export of services, one of the conditions is the recipient of service should be located outside India. How do I know that? This is a documentary evidence which is required for us to establish. So generally what happens, I get a purchase order, I get a service order. That is a documentary evidence to say that recipient is outside India. Third, very, very important in this, place of supply is outside India. We are going to read section 13 in a short span. In another 5 minutes, we'll start with our discussion. If place of supply is outside India, if my place of supply is outside India, then I can call this as export of service. Mind you, all these services, all these conditions have to be satisfied. Point number 4. Payment for such service has been received by the supplier of service in convertible foreign exchange or INR wherever permitted by RBI. Now, wherever permitted by RBI, one of the example we have is money received from Nepal and Bhutan. We have rupee as a currency even in Nepal and Bhutan. So if I have received money not in a convertible foreign currency, but in INR, it will be considered as a money in foreign currency. So there is a permission required by RBI where a foreign exchange should have been received in INR. So point number 4 says that when you have rendered the services, the payment should have received in convertible foreign exchange. Now, this point number 4 is one point majority of the exporters do get stuck. I'll give an example. Say, I have been telling you about this Urban Clap. There is a software where I get a contract for doing a work. Now, no doubt, I get a contract. This particular website fellow says XYZ INC in say US. So in this particular location, you please do the bookkeeping job for this particular activity. I pay you say $500 for that. Now, when I look into the payment part, the money gets into my account in a INR. The money gets deposited into my account in rupees. One of the conditions they say is money should have been received in convertible foreign exchange. So the money should have come in Forex. So what is the proof for that? I have a FIRC, Foreign Inward Remittance Challan. We call FIRC, or EBRC, Electronic Bank Remittance Challan. These days, banks stop giving physical FIRC. Few banks still give FIRC. I have to register on DGFT portal based on the confirmation from the banker. My DGFT, that is, if I have enrolled myself with HTPA or the DGFT authorities, they issue something called EBRC. Means I show that these are the services I have exported and this is the money which I have received in foreign currency. Based on that, I get a confirmation called bank remittance certificate. So that is a document to prove that money has come in convertible foreign currency. The last leg, supplier of service, recipient. Both of these two parties are not establishments of a distinct person. Now I have given an example. The previous session, one question was asked. I don't remember if it is Tejo or some other student. They asked, sir, if I supply goods from head office in Karnataka to a branch in Noida, will it be called as a supply of goods? That is called distinct person. Distinct person is a person having the same PAN or person of the same entity. For a moment, I'll give example of MTR. MTR is one of the chain of outlets, chain of hotels in South India. MTR is well known for its food division. Say if MTR has got a branch in Singapore, MTR India has got a branch in Singapore, any services done by local, that is MTR Karnataka to MTR Singapore, that shall not be called as a export. For the reason, my MTR Singapore and MTR Karnataka, these two are considered as distinct person. The term distinct person explained in section 25 of CGST Act. So friends, these 5 conditions have to be satisfied to call that as an export of service. Now, this condition has to be thoroughly understood for one to determine what is actually an export. Moving on further. Janaki says that freelancer.com is giving such jobs. Something like that, where I get money electronically. Yes, Janaki. So moving on further. Import of service. Now I draw your attention to this particular definition. Again, see, you love this subject, you really appreciate the subject when you understand the nitty-gritties, how the taxation works. For a moment, if you happen to sit into the shoes of a taxman, how you need to visualize, how you have to reduce the friction, how you have to ensure that taxation gets levied in a right manner. This is one definition which has got so much of depth of knowledge to understand. Let us read the definition. I'll explain what is that importance we have in this. Section 2, clause 11 talks about my import of services. This means supply of a service where supplier of service is located outside India. Now, sir, how do I know supplier of services is located outside India? Please keep in mind, exams is just to test your conceptual knowledge. Beyond exams, once you get into the industry, once you get into the practice, if you're in the finance world, you have to live with this concept called import of service, because reverse charge mechanism gets attracted. So this point says that if the supplier of service is located outside India, the recipient of service is located in India. Now what they say? My service provider outside India, my recipient of service is in India. So how do you know, given a transaction, how do you establish that? Take an example of, okay. Every one of us use something called email. In email, by default, when I have an account with Gmail, my free account gives me a data of 15 GB. That means whatever emails do come, I have 15 GB as an email storage. Beyond 15 GB, emails does not work. My incoming of emails, my outgoing of emails, like tendency to drop your emails because of your size of the inbox. There, for me to have a smooth flow of emails, I buy something called storage space. So on making a payment, I get 15 GB to say 1 terabyte or say a part of that. Now, this is a particular service which is given by Google. Now, for me to enlarge from 15 GB to say 1 terabyte, I need to pay annually 3,000 rupees. Now, this payment generally happens in foreign currency. So if I have a bill received from Google US to a person who is there in India, for a moment, I'll put myself into this example. I am a chartered accountant. I have my place of business registered in the state of Karnataka. I receive services from Google. Now, how do I know all these things? When I book a transaction, I book an entry in my books saying that your internet service charges or your what do you call domain charges, debit domain charges account, credit my bank account. So when I book this domain charges, I have a proof that I have received this particular service from Google Incorporated, not Google India. So this particular transaction where I can see the service provider is outside India from the face of the bill and I have received in India. Also, what they say, the place of supply of such service is in India. If this particular place of supply is in India, then it shall be called as import of service. Now, this third leg, place of supply is in India, place of supply of service is in India, is the third leg which defines something called import of services. I'll give an example. We haven't gone to section 13. Before we travel to section 13, I'll draw your attention how we interpret this particular import of service. Say, I have a company in, say, West Bengal. Part of my project, like this particular company, which is in West Bengal, so they are into design and they prepare something called seat foam. Now you would have seen this Featherlight, you would have seen the other brands which are used for your chairs. The chair, like if you look at the chair, it just looks like a chair. But when you go with a brand, there is a cost attached to that. A chair I can buy for 2,500 without a brand. The same chair, if I have to buy in Featherlight, it costs me 15,000 per basic model. Now, why do I pay 15,000? What is the difference between a unbranded and branded? They have something called R&D. They have something called a technology. Now, whatever be done, the life of a Featherlight chair is 10 years. The life of an unbranded chair, if your luck is good, it will last for 20 years. If your luck is not good, it may last only for 10 days. That is how it will be. But in case of a branded, it has got a life of that. For a moment, assuming that I am a company who is into making this foam in a particular chair, I have a client of mine who is there in Germany. I prepare a seat which is to used in an automobile, a particular vehicle, and I export these seats to Germany. Now, one of my clients has called for a particular discussion, saying that Praveen, we are changing this particular model. Why don't we have a discussion to change to suit our new requirements? Let us have a discussion. So one of the marketing engineer, one of the production engineer, and one of the costing gentleman, 3 gentlemen goes to Germany and do attend a meeting in Germany. Now, when they go to Germany, I have to have an accommodation. I need to have a food. I need to hire a vehicle for the purpose of accommodation to have a meeting. I need to have a particular room or a place for having a conference or a particular meeting. What if all these services are done in Germany? Now, how do I interpret this particular element called place of supply? Now, does that mean place of all these activities which happen in Germany, by any means of interpretation, can I draw all the services to happen in India by virtue of this definition? Is what clarified in my section 13.1.3. So the section 13 has got a prominence with this particular definition called 211. So they say, just because service provider is outside India, just because recipient is in India, you cannot call as import until and unless my place of supply, the place of supply of service is also in India. Now, this is one condition they have said with respect to import of service. So we need to understand these aspects as we walk through. So I would request all of you make a couple of examples as we discuss through to test this condition called import of service. Moving on further. Location of supplier and location of recipient. In the last session, when we discussed on domestic services, we had a at-length discussion. So I'll skip this particular 2 definitions, but I would request you to keep in mind this location of recipient of service from your import of service point of view. Levy was duly explained by the other faculty. So I wouldn't touch upon the charging section and the levy with respect to this interstate supply, I'll straight away go to my place of supply provisions. Now, as I've said, Section 10 deals with the goods for domestic, Section 11 deals with the goods for cross-border transactions, right? Now, what does this Section 11 say? The place of supply of goods, Clause A, imported into India, shall be location of the importer. Now, imported into India, the place of supply of goods, which are imported into India shall be the location of importer. Now, I'll give an example for you to understand this definition, how we need to interpret, why is it important for us to understand. Take example of, say, Maruti. Maruti is into manufacturing of your four-wheeler. So Maruti has got its unit in Gujarat, say in Tamil Nadu, and let's take example of Haryana. In India, for a moment, arbitrarily, it need not be practically where it is located. Just let's take an example. Maruti has got its manufacturing plant in Haryana, Gujarat, and Tamil Nadu. 3 locations are there. Maruti imports a raw material for the purpose of manufacturing activity. Now the question comes here. When the goods are imported, there is a levy of customs duty. Along with the customs duty, equivalent, whatever domestic GST is applicable, the same domestic GST is also levied. What is the rate of tax applicable in India? The same equivalent rate of tax is applicable, calling this as a interstate supply. Now the challenge comes here. The crux will be here. How do I know Maruti has got presence in Haryana, Gujarat, and Tamil Nadu? There, I have something called GST number. For your general understanding, people who are not exposed to foreign trade policy, I draw your attention to something called IEC, Import Export Code. This IEC is a particular unique number, like your PAN, which is given by this Department of General Foreign Trade. So this DGFT authorities give you something called IEC. Without IEC, I cannot import goods nor export the goods for the purpose of business or commerce. If you are doing it for your personal use, I need not have IEC. Like example, you have a cousin of you in US, you need to send Rakhi. You have a cousin, another friend of you in, say, Singapore, you need to send some pickles or some particular food stuff. So anything of personal use, I need not have a IEC. But if I'm using it for business or commerce, I'm supposed to have a IEC. So whenever I have an IEC, along with the IEC, I need to give where all I have been doing my business or commerce, and state-wise I have to give my GST number. So here, the important aspect is when the goods have been imported, I need to give a respective GST number of the importer. So when I'm drawing your attention to this location of importer, this means that GST of the respective state has to be given. Now the general question comes from you as a chartered accountant. So what if for all 3 locations goods have been imported? Now question comes here is, sir, goods get imported, but please keep in mind, though the goods have been imported for the 3 locations together, from customs, it does not go in bits and pieces. From customs, it goes to a particular location. From there, the dispatch happens to the respective states. So what if in a one invoice, I have received for 3 locations? It is not acceptable. You need to declare for this consignment is meant for which location. In IEC, you have various registrations, various addresses of the respective states. You need to give which particular address this material is consigned, imported to. And also, in addition to that, when my supplier sends the material, he'll mention Maruti Gujarat, Maruti Tamil Nadu, Maruti Haryana. So he gives the respective details on the invoice. That is where I refer to my GST number. So the people who doesn't have knowledge on DGFT provisions, I need to have GST number quoted in my IEC, and that GST number I need to indicate to my customs authorities. Based on that, they charge something called IGST. Why do I charge IGST? Section 11 says that it shall be called as your supply of goods in the course of interstate trade or commerce. The place of supply shall be the location of the importer. So where is the supplier? My supplier is in Germany. My supplier is in Singapore. My supplier is in a particular location. Where is the place of supply? The place of supply is in India. And this particular transaction has been defined to be a interstate supply. Where was it defined, sir? Section 7. I draw your attention to Section 7. People are listening to me. Please look at your Section 7. Where in Section 7, they have clearly discussed on this aspect called Subsection 2. Supply of goods imported into territory of India till they cross customs frontier of India shall be treated as supply of goods in the course of interstate trade or commerce. Now, this is what I was referring. How you get connected with the tax laws. When a person is writing a law, he has to keep in mind, define the boundary. Who can levy a tax? How it can be taxed? When the goods get into the state of Gujarat, say for a moment, I have a port, say a port where customs port is there in Gujarat. When the flight lands in Gujarat, the Gujarat state government cannot say, because the flight has landed in Gujarat, I being the state of Gujarat have a right to levy tax on that. Absolutely no. Article 269A has protected the interest of the union and protected the rights of the state also. Where they say, in relation to interstate trade or commerce, it is the GST levy decided as per the place of supply provisions. Now here, what they say, supply of goods imported into territory of India till they cross the customs frontier of India. Now please understand, what do you mean by customs frontier of India? Customs frontier of India is defined as a customs area. For that particular customs area, you need to wait for the chapters in customs to start with. Just to give an indication, what do you understand by customs area? Customs area means a customs station or a warehouse. I repeat, customs area means it is a station or a warehouse, and also includes an area where the imported goods are exported goods are ordinarily kept before they are cleared from customs station. Like we have this concept called warehouse, bonded warehouse. Now, majority of you have to read these particular provisions not from your examination point of view, from the business point of view. We have something called dynamics of business. How you do your business well, how you save your cost of operations, how you improvise your scale of economy, that matters. So with respect to customs, I would say must. If you have not read, don't worry, not from examination point of view, but from your career point of view, there is a lot of scope for you to look into something called DGFT provisions. So with respect to this import, they say any goods which are imported into India, the place of supply shall be the location of the importer. The question comes here, examination point of view. Wait and watch for this examination question. This example of Maruti, they say Maruti has got its location in Gujarat, Haryana, and Tamil Nadu. There is an order placed by the unit which is there in Gujarat for importing 10 pallets of this what you call a particular oil. When a consumable oil has been imported for 10 barrels from Germany to the state of by the person whose a unit which is there in Gujarat, examine the place of supply. Now they say Maruti has registration in Gujarat, Haryana, and Tamil Nadu. Answer for that will be the location of the importer. When I say importer, distinct person. I have location at 3 states. The particular state which has placed the order for import, that shall be called as your importer. So the answer for this question will be place of supply shall be location of importer. Moving on further, exports. Export from India shall be location outside India. Exports. My exports will be from India shall be the location outside India. In its grammatical variations, when I say definition outside India, taking the goods out of India. That is what we need to understand. So these are the two important definitions which are covered in section 11 to identify my place of supply. Bear in mind, examination point of view, this location of importer is what will be tested from your practical example point of view. This is with respect to section 11. Before I move further to other section, let me see quickly if any questions are there. A good question. As expected, Namita has asked this question. So what if the service is provided to SEZ, will it be export? I'll change your question slightly, Namita. Since services we haven't started, I'll touch your question with respect to goods. For the benefit of other students, the question is like this. If the goods are provided to SEZ, will it be called as export? This is a question to you. Again, examination, wait for 3 marks question, look for 3 marks question on this particular aspect. Fantastic question, Namita, you have brought in. I draw your attention to this particular definition. Now, everyone, come to page number 5.6 of your institute material. Namita, page number 5.6 of institute material. Read this definition, export of goods. With its grammatical variations and cognate expressions, means taking goods out of India to a place outside India. Now, examination, final examination, expect the unexpected. A question for 3 marks, saying that goods are supplied to a SEZ unit in Tamil Nadu. Will it be considered as export? You will refer to this definition called Section 2, Clause 5 of IGST Act, where you say, since the goods have not been taken out of India, it shall not be called as export. That would be your answer. Namita, with respect to services, wait for that section 13 to come into picture, where we'll have a little more clarity. However, the same analogy of export of goods will get applied for services as well. Students, I request you to have your attention to these kind of definitions which would be tested in your final level. Not complicated. These are all basic fundamentals. How you apply your concepts. The moment we say SEZ, most of us would have seen in our examination that this particular supplies to SEZ is called as zero rated supply. The moment I say zero rated, sir, is it an export? Absolutely no. Sir, it is not an export, it is within India. The moment I say it is not export, sir, do you mean that it is taxable? Answer, wait for section 16 where it says zero rated supply. So supply of goods and services to SEZ unit or SEZ developer shall be called as zero rated supply, but not export of goods out of India as per your GST law. I'll hope I've clarified your question, Namita. Now, moving on further to section 13. Section 13 which deals with your services, place of supply for services. Now, I say that this Janaki, yes ma'am. Again, continuation to what we had discussed on Namita's question. Janaki is asking, so what happens to with respect to goods which are imported from SEZ? Will it be called as import? I wouldn't say it is import. It is clearance from a bonded warehouse to a domestic tariff area. For the benefit of other students, I'll put it this way. Any goods which are moved from SEZ area to a domestic tariff area, it will not be called as import of goods. It will be called as clearance of goods from a bonded warehouse to a domestic tariff area. I repeat, clearance of goods from a bonded warehouse to a DTA. That will be called as your clearance from SEZ to a non-SEZ. Hope I've clarified your point, Janaki. Let's come back to section 13. Section 13, this is the base for all our discussion on reverse charge mechanism, import of service, levy of tax in relation to interstate supply. section 13 says you'll apply section 13. You'll apply section 13 only if supplier or recipient is outside India. Any transaction, I have two parties. Any transaction, I have two parties. Seller of goods, buyer of goods. Service provider, service recipient. So if these two parties, if I see either the supplier of service or recipient of service, either of these two parties is outside India, then my provisions of section 13 get attracted. Otherwise, no, I don't look into section 13. So where do I look in? I'll come back to section 12. I repeat, location of supplier or location of recipient is important for me to examine my section 13. Now the question comes important, next question. Sir, how do I deal with the location of supplier, location of recipient? Now again, I draw your attention to page number 5.7, 5.8, 5.9. Please make a note in your workbook. Institute material, very elaboratively they have given a pictorial presentation. How do I identify location of supplier? How do I identify location of a recipient? So this page number 5.8, 5.9 explains for us to identify where is the supplier, identify where is the recipient. This is a crux for us to understand section 13. Out of these two, one of the party, look at this, one of the party is outside India. Then only I'll come to my section 13. If none of the parties outside India, I'll go back to section 12 for understanding my place of supply provisions. Let's move further. Having understood the basic thumb rule, general rule. Now again, as we have read in section 12, if I don't have anything in the notified list, by the way, in your section 12, I had section 3 till section 13, section 14, that is a notified list. Similarly, under section 13, I have subsection 3 till 1.3. I repeat, section 3, subsection 3 till subsection 1.3. This is called notified list. If I don't have any of those lists which is there, I'll come back to this subsection called subsection 2, which is called as a general rule. So if I refer to subsection 13, subsection 2, it says, place of supply shall be location of recipient of service. When do I apply this? I don't have my services in any of the notified list. I repeat, my list of services is not there in the notified list. Then I'll apply this general subsection. As per this general subsection, my place of supply shall be location of recipient of service. Remember the cardinal principle? Because it is destination-based taxation. If it is destination-based taxation, my service will be having a place of supply where there is a recipient. So if I don't know the address of the recipient, then the location of supplier. I repeat, sir, I don't have the details of the recipient, then I'll just go with the supplier of service. Now, services is very complicated for one to fix upon the taxation. Always evidence is very important. When we go to the court of law, when we go for any adjudication process, when we go for any appeal, evidence plays a prominent role. So with respect to the transactions, identification of the recipient of service is one important factor. So if I fail with respect to this recipient of service, then I go to something called location of supplier of service. So on record, if this is not available, I choose this location as the location of supply, place of supply. This is the cardinal principle we need to understand. Hope I have made it very clear now with respect to subsection 2. Now, if you refer to section 12, if you refer to your section 12, what is a cardinal principle? The place of supply will be for the registered person. If the person is not registered, the address available on record. The address is not available wherever is service provided. The same concept I'll apply here. I don't choose registered person for the simple reason one of the parties is outside India. So for that reason, I would say place of supply shall be the person where the recipient of service is located. Now, I'm going in detail so that this concept gets right into your analogy, where application of your this concepts in the problems given will be easy for you to solve. Institute has published this material on the website along with a set of questions. I've given MCQ and questions to solve. I don't know how many of you have downloaded that Word file. Please download that Word file and make an attempt to solve. I gave answers to that particular questions. Today, if time permits, we'll have a discussion on those questions, and also I'll publish this particular questions with the answers for you to practice. Now, let's start with our journey of notified list. To start with, first item is called performance based. So in this particular section 13, it says, when there are services which are supplied in respect of goods, where the goods are to be physically made available for giving a service. I'll give an example. Sir, I have imported a machinery. This machinery has been imported from Germany. When the machinery comes to my factory in, say, Gurgaon, the machinery has come to Gurgaon, this has to be installed. By doing the installation activity, the technician has to come all the way from Germany. Services supplied in respect of goods which are required to be made physically available. So unless I have the goods, I cannot do the service. Similarly, vice versa. Sir, I have supplied goods to a customer in Singapore. I'm into manufacturing of, say, mobile handsets. This mobile has got a technology where, based on the number of hours employee is working, it captures the movement of the employee, something called time and motion study. If the employee is sitting at a particular place, it reads the idle time of the employee. Now, this particular mobile which I've sold has got some technical glitch in that. So what happens? To rectify that glitch, the mobile has to come back to India. So where I am registered, it has to come back for the purpose of rectification. So when we talk about this place of supply, that is section 13, subsection 3, this talks about performance on goods. Now, when I talk about performance on goods, that is a service which I am giving on goods. First example I gave with respect to installation of a machinery. Second example with respect to the mobile on which a software was installed. Because of a technical glitch, the mobile has to come back into India for repair activity. Third example. Sir, I have given a particular program which is given to a particular customer for installation of, say, accounting package for doing a costing related activity. In the part of this execution, there is some technical bug. When someone is doing what I can say is a QR code. Like we have this invoices where there is a QR code printed. Someone scans that QR code, automatically the accounting entry gets posted into my accounting software. I did that particular software develop. So when there is a particular QR code scanner, there's some issue with respect to that particular scanner. Something is not happening. So this scanner I sold to a customer who is there in, say, Japan. Now, in the process of using that particular scanner, the customer raised a complaint saying that this is not working. Option 1, the scanner has to come back to India. Option 2, I need to go back to Japan. I need to travel to Japan. Option 3, sitting at India, I can connect remotely. I can see what is happening and do a repair related activity. So this is my third example where I do a service electronically on the goods which are available in a remote location. Now, these are the three examples which are linked with your performance based. Means I give a service on goods. 1, I need to have physically available. 2, I can bring it to India and send it back. 3, sitting in India, I can do a repair on that particular goods. Now, these are the three examples I give it to you for understanding this performance based on the services which are linked with your performance based. So first of that, what they say, where services are required, which demand physical presence of the goods. Like example, installation. Unless I have the goods, I cannot do the installation activity. Where the performance is done, that shall be called as your place of supply. To mark an example for this, I have imported a machinery from Germany. A engineer comes all the way from Germany for doing an installation activity. Where is the service provider? In Germany. Where is the installation happening? Say in my factory, which is there in Noida. So if the installation is happening in Noida, place of supply happens to be Uttar Pradesh. Service provider outside India. Place of supply on the goods which are physically made available for installation in Noida. Uttar Pradesh happens to be my place of supply. This is your first example with respect to performance based. Point number 2. Where the services are performed on the goods remotely, that is by way of electronic means, then the place where the goods are available, that shall be your place of supply. I give example of Japan. I am sitting in my factory, say in Mumbai. From Mumbai, I connected electronically to my particular customer's location through particular modem, and then I did a small troubleshooting. I did some programming, some sort of codes which have been executed, and then did the malfunction rectified. Now, this particular activity, when I do electronically, the location where goods are available, that shall be your place of supply. So in this example, I am a service provider. I am in India. I am doing a remotely on the goods which are available in Japan. So the location of the goods in Japan shall be my place of supply. This is your second clause. Third clause. Goods which have been temporarily imported into India for the repair, and I have done a treatment or process. Now, I gave example of a smartphone. I sold a smartphone to a customer in Singapore. I sold a smartphone to a customer in Singapore. That smartphone has come back to India for a particular malfunction. So when I do a repair activity, smartphone was imported into India, again it will be sent back. So the goods which have been temporarily imported into India, the place of supply shall be location of the recipient. That is my customer who is there in Singapore, that shall be my place of supply. I draw your attention to page number 5.61. That talks about your performance-based related activity. So the goods which are imported temporarily for the purpose of repair or treatment, process or treatment, and re-exported back, then I call that as performance-based, where if it is physically done, physically made available, place of supply where the performance is done. If it is done electronically from a remote location, the location where the goods are available. Goods which are temporarily imported and sent back, then I apply subsection 2, general rule. What is the general rule? Where the recipient of service is there, that shall be my place of supply. So please refer to page number 5.61 of your institute material, which explains in detail with respect to this particular provision. Now, in addition to this, when I was talking about performance-based, there could be services where a physical presence of an individual is required, or a proxy or a agent of that particular individual is required for the purpose of rendering this particular service. I'll give an example. Take example of your what I can say, teaching playing a piano. I have to teach someone piano. Service is supplied by an individual, supplied to an individual, which requires the physical presence. Now, for teaching piano, the particular student has to come all over the place where I'm staying. Then the place of supply shall be where the performance is done. At times, it will be done to an agent. Like example, drafting of a bill, drafting of a particular document. So there is a legal issue which is happening. Like example, some of NRI who is there in Singapore, he has got a property which is there in Tamil Nadu, which is ancestral property. Some sort of dispute is happening with respect to that particular property. Part of the dispute, there is a legal summons which is given where a physical presence in court is required by that particular individual. Now that individual, can he himself come and present, or he can appoint a power of attorney to have a representation. So in the process, the legal advocate who gives the services to this particular individual, again, that is performance based. The law says that the location where the performance is done, that shall be your place of supply. So with respect to goods, we have discussed three examples. With respect to services, where a physical presence of a particular customer is required, the place where the service is actually performed, like as an advocate, I have my office practice in Chennai. If this customer comes to Chennai for getting the draft, deed drafting, will drafting, or to represent in a particular court, all these are the services which are linked with your performance. Because I happen to be in Tamil Nadu, the place of supply happens to be Tamil Nadu. Customer is from Singapore, service provider is in India. Place of supply in this particular regard is called your Tamil Nadu. This is your activity because it is performed in Tamil Nadu. Let me see if there are any questions before I go further. There is one question from Namita. For tax purposes, SEZ is treated as a place outside India, so why is it not export? See, it is only for taxation purpose you need to have that SEZ, Namita. Certain definitions have to be read the same fashion. Import means import from a territory outside India. Export means from India to a soil outside India. Those definitions we cannot alter to match my taxation principles. Now, to match your requirement of SEZ, benefits given to SEZ, Section 16 in IGST Act was brought in. But I cannot change the definition of import and export. The moment you, as your interpretation, if you have to bring SEZ into that, entire customs law goes for a toss. Entire GST law goes for a toss. So not to have that disparity, they keep the original sanctity as it is, and whatever additionals are required, I bring in various sections where Section 16 takes care of your zero rated supply of SEZ. That is the answer to your question, Namita. Now there comes the challenge with respect to this place of supply where I was talking about performance. So what if the service is done in a place which is outside India and one of the place happens to be India? What shall be the place of supply with respect to that particular activity? I'll give an example in Excel so that you can easily connect with this particular explanation. Let me come back to my Excel file. With respect to Section 13, Subsection 3. Now, say there is a supplier, there is a recipient. Supplier is in, I'll refer to Tamil Nadu. Recipient is in Singapore. The supplier sold, I'll say, laser cut machine for Singapore dollar 42,000 during Jan 21. Now, this supplier who is there in Tamil Nadu, has sold goods worth 42,000 Singapore dollar to a recipient who is there in Singapore. Say in March 21, there is a complaint for malfunction. Now, this supplier in Tamil Nadu has got two choices. I'll say choice number one, re-import machinery for repair and re-export. Choice number two, send an engineer for repair. Option number three, identify an engineer in Singapore itself. Now, economies of costing, and your business principles. When this kind of practical situation comes, now if the machinery has to be imported, the customer says, boss, you have sold the machinery right from my factory in Singapore till your factory in India. You have to bear the cost of transportation. You have to get the customs clearance, all the documentation, everything is to your account. I'm not bothered. Option number 2, sending an engineer for repair activity. Now the repair cost may be, say, estimated repair cost is say 500 Singapore dollars. Now, if I have to send an engineer for the purpose of doing this particular repair activity, I need to spend 1,250 Singapore dollars for travel, accommodation, getting the visa and all formalities, everything put together. Now, what do you suggest? Boss, better you don't send this engineer. Find someone locally and get this repair activity done. So if identify Singapore, some engineer locally, say that fellow charges me, say 250 Singapore dollars. I will prefer, rather than sending from India, I'll send it. I'll choose a person from there and get the activity done. Now, this is the backdrop with which this problem was given. Now, obviously, management chooses for this particular third option, give to localite. Management decides to give this activity to, I'll say, select. So this activity was selected by the management, right? Now, he has done the local repair activity. Somehow he says, sir, there is a part which has been damaged, which requires some calibration. Now, this particular local engineer removes the machine, opens the machine, he sends a part to India. For repair. Now, this part which has come to India for repair activity, and if this particular performance is done in India, then, okay. Received, I would say, import for re-export. Import for re-export. The component has come to India. I did the calibration. I have sent back to India. Then they say place of supply is as per section 13, subsection 2. That is your general rule. Because the component has come to India, I did a repair activity, I have sent it back. Import temporarily for the purpose of re-export. Then I'll apply my provisions of general rule. What does the general rule say? Where the service recipient is there, that shall be the place of supply. Now, with respect to this particular slide, it says, what if the services are rendered in taxable territory other than this? Now, I'll put it this way. Machinery has been put to use in India for certain period and then exported. Now, please understand carefully. This component which has come into India, I just did a small activity and exported. Then I'll go with the general rule. Rather, that particular machinery or component, this has been put to use in India. I haven't exported as it is. I wanted to see whether this component is working or not. I have put to use in India for commercial activity. Then I have exported. Then they say that place of supply shall be India. The place of supply shall be the state or union territory where it has been put to use. So this is what this particular provision says. Section 13 says, let me come back to my slide, where Services are provided at more than one location, including a location in taxable territory. Now, including a location in taxable territory. When we talk about this particular including taxable territory, please keep in mind the component which has come into India has not been exported as it is. This component was put to use. The moment it was put to use, then the place of supply shall be taxable territory. The place of supply shall be taxable territory. It may sound little Greek and Latin. Now, this is how the services are put for test for examining how do I identify place of supply. Now, so practically, this is the officer check all these aspects. So practically, do we need to have these? How do we get these aspects validated? Let me come back to my Excel file to explain you this in a better fashion. Now, see, when goods have imported for re-export, there is certain terms and conditions. Now, there is a certain period. I have to import with the prior permission. I have to seek a particular period. I have to maintain an inventory. I have to maintain a register. The movement of goods from one place to another place, all those things, I need to give a declaration to the customs authorities. Based on the prior permission, only I can use this particular goods without payment of customs duty. I repeat, when the goods have come into India, I need to give a set of declarations to the customs authorities. Based on their clearance, these goods come into India. So based on these things, there is a hell lot of documentation. So this happens with respect to cross-border transactions, where if the goods have come into India, have not been sent as is, the goods have been put to use in India. I have written something called put to use. This aspect, this limb explains you how the place of supply, instead of Singapore, it happens to be India. So if there is a performance done in India, then my place of supply happens to be a taxable territory. So what if this put to use is more than one state? Then based on your books of accounts, which all states you have used, you have to determine your place of supply. So I have used this particular component in Tamil Nadu for 2 months. I've used the same component in Mumbai for 2 months. I've used this particular component in Haryana for 1 month. Based on the number of months I have used, my place of supply will be 2 months in Tamil Nadu, 2 months in Maharashtra, 1 month in Haryana. So this is how my place of supply with respect to the goods connected with performance is derived. Attention to page number 5.61, 5.62. Let me see if any questions are there before I go further. Let me know if I'm making it too technical. I'll make it more easy. I'll make the examples easy to understand. Okay, so far so good. No questions on this. If you feel the concept is becoming more technical, let me know. I'll make it very simple for you to understand. Okay, next. For this particular usage in India, they have referred something called Rule 7 on the basis of invoice raised, on the basis of the time I've used in a particular state, or on the basis of generally accepted principles. I derive something called place of supply with respect to performance based. Most of the cases, this particular subsection 3, you examine where goods have been imported into India for the purpose of job work, for the purpose of repair, where unless you test it, it will not be sent back. Those are the cases I use this, apply this particular subsection 3. To give a classic example where we apply this particular subsection 3 is automobile industry. In case of automobile industry, where the tools or the products which have been exported, suppose if it has come for a particular warranty or it has come for a complaint, what generally happens is they do a repair activity, they do a simulation. I call that as a simulation. So they do a testing activity in multiple states, and then once they feel the results are okay, then they export it back. That is the point in time they say the place of supply does not be a foreign nation. The place of supply happens to be the state or union territory where it has been put to use. This is how we apply subsection 13(3) performance based. Next, this is very simple. It will not be too technical like what we have discussed in subsection 3. This is location of immobile property. Answer is very straight. Everyone knows. So where immobile property is located, that shall be my place of supply. So the services supply in relation to immobile property, services by experts or estate agents, services by way of accommodation, hotel, guest in, etc., etc. A grant of right to use immobile property. For all these cases, my location where the immobile property is located, that shall be your place of supply. I'll give an example. Say I gave example of this Maruti or this Featherlight furniture manufacturer. If the furniture manufacturer, he sends 3 of his employees to Germany for a particular discussion on a particular model of design. So when these people travel abroad, they need to stay in a hotel. So when the employees stay in a hotel in Germany, the place of supply, service provider is in Germany, place of supply is in Germany. So when the place of supply is in Germany, refer to your definition called import of service. Everyone, please refer to your definition called import of service. When you read this particular definition of import of service, page number 5.7, the third condition, place of supply of services is in India. If the place of service is in India, then I can call as an import of service. Now, this case, where the employees are staying abroad, the service provider is abroad. Like I book a hotel in Germany, employees stay in that hotel in Germany. What do you call as a place of supply? It is Germany. Now, if you read this definition called import of services at page number 5.7, it is not import of service. When it is not import of service, where is the question of levy? This is how we interpret my place of supply provisions for import of service, export of services. Hope this point is clear with respect to immobile property. Now let's move on to the next service called admission to or organizing of events. Admission to or organizing of events. In this particular thing, as we have discussed in our section 12, the events which are connected with your cultural, artistic, art, sporting, scientific, education, or a business fair, trade, etc. Any of those services which are ancillary, the place of supply shall be where the event is actually held. I'll give an example for you to understand this particular thing. Let me come back to my Excel file. We're talking about section 13, subsection 5, which is connected with your admission or organizing. Now, so there is a XYZ Limited registered person in India. So there is a trade fair happening in, say, let's take Dubai. Now, this is a trade fair where worldwide all the people come together for the purpose of exhibiting their skill set. Say, participation fees of, say, $12,500 is charged for this. There is a fee called participation fee of $12,500. Now, what happens here when someone participates in the fair, this particular trade exhibition? I take my brochure, I take the goods which I manufacture, I can put for a display, I can demonstrate what capacity we have. So it is easy for me to get the abroad clients with respect to this particular activity. Now, is it an import of service? Now, who is the service provider? Service provider, for a moment, let us say I'll name as ABC INC. ABC INC, entity registered in Dubai. Is called as a service provider. Service provider is in Dubai. There is a admission, there is a trade fair which is happening. I participate, I get an admission to that trade fair where it is happening in Dubai. Now, if you read this particular section 13, subsection 5, it says the place of supply shall be the place where event is actually held. Since the event is held in Dubai, place of supply shall be Dubai. Now, if you read this definition of import of service provider should be outside India. Yes, is outside India. Service provider should be in India. Yes, service provider is in India. Place of supply shall be in India. Now here, place of supply is not India. So because it is out of India, I can not call this as a place of import of service. Not an import of service. So this is how we explain the provisions connected with your place of supply in relation to admission or organizing an event which is outside, where it is connected with the place where the event is actually held. Now, this is what we need to understand. Now, vice versa. So, what if the trade fair is happening in India? Let's look at that also. Let me come back to my Excel to explain that. Now, assuming for a moment, there is a trade fair happening in Mumbai. So there is an entity called ABC Private Limited has organized the trade fair. The participation fee is say 2,50,000 INR. Now, there is a company called, let me name this company as XYZ INC, which is registered in, say, Singapore. Now, this company XYZ Inc. has paid rupees 2,50,000 for participating in this trade fair which is happening in Mumbai. Now, where is the service provider? Where is the service recipient? My service provider is in Maharashtra. Service recipient is in Singapore. Where is the place of supply? Now, remember section 13. My section 13 gets applied. Either of these two parties is outside India. Because one of the parties outside India, I'll apply my section 13. In section 13, subsection 5 talks about your admission or organizing. The place where this event is organized, that shall be your place of supply. Now, since the place of supply in this particular thing will be Maharashtra. Right? Now, what we have to examine, is this an export of service? Now, please refer to your page number 5.6. If you look into page number 5.6, in that clause C, the place of supply of service is outside India. Now, is the place of service is outside India? No, it is Maharashtra. So, because it is Maharashtra, this is not an export of service. Right? So this is how we examine the place of supply in relation to import of services, in relation to export of services. Examination. You get 3 marks for these kind of questions, where for conclusion you get 1 mark. For examining this particular service recipient, you get 1 mark. For explaining the provisions of import of service or export of service as per section 13 and section 2, you get another 1 mark. So overall, you get 3 marks for concluding this place of supply and also giving opinion on your export of service or import of service. This is what you need to understand. Coming back. Let's move on to your section 13 subsection. Okay. So what if the services are provided in more than one location and one of them happens to be a taxable territory? Then definitely India will be the place of supply. Like this event, what I was talking to you, if the events are done in multiple locations, then one of the locations happens to be taxable territory, place of supply happens to be taxable territory. I'll come back to Excel to explain this particular thing. Like, so there is a event manager. There is a service provider. There is a service recipient. So service provider is in, let's take for example, service provider is there in Singapore. And service recipient is there in India. So Mr. A from Telangana. Now, this gentleman wanted to have a booking for various trade exhibitions. I'll say various exhibitions of art and painting. Mr. A has got a hobby of art and painting, and he wanted to have participation in these various exhibitions. And service provider, so there is a gentleman called Mr. X. So this gentleman from Singapore is providing these services to this gentleman from A. So part of this event, he says, I give you entry to exhibitions happening at US, then say Germany, Russia, and finally Delhi. He said that I'll give you entry ticket to exhibitions which are happening at various places, US, Germany, Russia, and finally Delhi. Now, since one of the place happens to be a taxable territory in India, then as per your section 13, subsection 5, place of supply happens to be the taxable territory, that is Delhi. Service provider is outside India. Service recipient is in India. Then section 13 gets applied. When I apply section 13, since one of the place happens to be your India, my place of supply happens to be Delhi. This is what we need to understand from section 13, subsection 5. Let me come back to the presentation. So where services are provided at more than one location, including a location which is in taxable territory, then place of supply shall be such taxable territory. So what if it is more than one territory in India? So I have to go as per the respective states where the service is provided. That should be considered as my place of supply. Next, very important examination. Expect one question from this subsection 8 most of the time because of the nature of provision, the way it has been tested. In fact, there was one particular case which has been filed in Gujarat High Court challenging the levy of this section 13 subsection 8. I'll explain you this provision, then I'll explain you what was challenged in the Gujarat High Court. Before that, let me just see if there are any questions so far. There's one question from Suraya. As per 12, section 12, it is mentioned that if event is held outside India, place of supply is location of recipient. Section 12, subsection 7. I think we are talking about section 13. Okay, Suraya is asking about section 12. It is mentioned that if the event is held outside India, place of supply shall be location of recipient. Okay. With respect to section 12, Surya, where the event is held more than one state or union territory. Okay. If the event is held outside India, place of supply shall be location of the recipient. Now, in case of this section 12, service provider is in India, service recipient is in India. Like example, say a honeymoon package or your world tour. There is a travel agency called XYZ Travels. There is an individual, Mr. X, who walks into this particular travel. Because both the parties are in India, they cannot call place of supply as outside India. They say place of supply is the place where the recipient is located. Since the service is, though it is performed outside India, since the recipient is in India, that shall be called as your place of supply. We don't apply this section 13, rather we apply section 12 and destination based, consumption based. Since I get the benefit as an Indian, the place of supply is a recipient is what they have explained. So this is the logic behind your section 12, subsection 7, Surya. Hope you have understood that. If you have any doubt, you can post a question. I'll take it on this particular thing. Moving on further. Location of service provider. Based on the location of service provider. This section 13, subsection 8 says that where the service provider is located, that shall be your place of supply. Services in relation to banking company, finance institution, non-banking financial company, or to account holders. Now, for a moment, so there is a NRI who has got a bank account with the State Bank of India. This NRI wanted to have a particular account opening, or he wanted to get some particular bank guarantee with respect to services to be performed in India. In relation to those services, where the service provider, that shall be called as the location of place of supply. Let me explain this by way of example. Say there is a company called L&T. There is a another company called XYZ PTE Limited. L&T is an entity in India. XYZ Limited is an entity in Singapore. Say L&T, for a moment, I'll say this is a location in Tamil Nadu. L&T has got their operations in Tamil Nadu. L&T has awarded a contract to XYZ Private Limited for providing design and drawing of a structure. Now, this is an entity which is based in Singapore. This is work which was given by L&T to XYZ Private Limited. Now, the value of the work which has been assigned. So for a moment, let us assume the value of work is say 5 crores. Now, generally, any big contracts are given, there is a requirement of a bank guarantee from the customer. The service provider has to give a bank guarantee. So why is a bank guarantee required? Now, all these commercial transactions, to have a trust, to have the interest of the organization protected, they insist that a bank guarantee or a security is required. Now, this particular entity, XYZ PT Limited, he has bagged a contract worth rupees 5 crore. L&T says that BG required for 20%. Now, 20% of 5 crore happens to be 1 crore. Now, this particular XYZ PT Limited, he has to give a bank guarantee for the work which is going to perform. So what happens? This particular entity approaches a bank called State Bank of India, which is there in Chennai, and requests, please provide me a bank guarantee for this particular work which is being undertaken. Now SBI does all the paperwork, and the SBI provides this particular bank guarantee to XYZ PT Limited. Now here, the transaction between SBI and PT Limited, the transaction between XYZ and PT Limited, this is what explained in your section 13, subsection 8. They say the place of supply in relation to services provided by a banking company or a financial institution or a NBFC shall be the location of the service provider. Shall be location of the service provider. So why do you want to say that? Location of a supplier of service. Now here, place of supply shall be location of supplier, that is Tamil Nadu. Place of supply shall be Tamil Nadu. So why do you want to have that? The law was designed such a way that it is not possible, because these are connected with the performance based, because this bank guarantee is getting consumed in India. This is not going to go back to Singapore. This whatever performance is happening, it is happening within India. So the place where the service is performed, that a service provider shall be considered as your place of supply. Hope you have understood this concept, why in relation to banking company, the place of supply happens to be the place where location of the supplier is located. So here, my service location of service provider. Now in relation to transaction between SBI and XYZ PT Limited. This is a transaction. We are talking about service provider, State Bank of India, which is in India. Service recipient, XYZ PT Limited, who is outside India. Because one of the parties outside India, section 13 gets triggered. In relation to this section 13, in relation to this banking services, they have said that the location of service provider shall be the place of supply. So here, SBI happens to be your service provider. Okay, I'll break up this way. Service provider, recipient. Service provider is your SBI and service recipient is your XYZ PT. Now, considering these things, my place of supply happens to be Tamil Nadu. This is what we need to understand from your first aspect called section 13, subsection 8. Right? Next, intermediary services. Now, this is the area where I was telling that there was a Gujarat High Court, there was an argument made. So why you want to hold the location of a service provider to call that as a place of supply? I'll come to the definition of intermediary and then I'll explain you this particular provision. If you read this particular definition of intermediary, section 2, clause 13 has explained this way. Intermediary means a broker, agent, or a person by whatever name called, who arranges or facilitates supply of goods and services of both or securities between two or more persons, but does not include a person who supplied goods and services on his own account. I'll explain this by way of example so that you will understand this intermediary very, very carefully. Section 2, clause 13 explains this term called intermediary. See, there is, I'll give a classic example which we have to understand. So there is an entity called Ashok Leyland. I'm taking a hypothetical example. There's an entity called Ashok Leyland, and there is an entity called, say, Toyota. Now, Toyota has got its, it is based in Japan. Ashok Leyland is based in, say, India. Now, there's an in between a person called Mr. X. Mr. X does the marketing activity. Toyota appoints Mr. X for marketing. Toyota has a list of products which are available. So they have appointed Mr. X to do marketing activity and get customers for their products. So Ashok Leyland wanted some particular technology. So Mr. X says that, look, there is a supplier called Toyota. You can buy from this particular company for the desired products. So once Ashok Leyland places an order, Toyota supplies the goods. Toyota supplies goods to Ashok Leyland on the basis of order confirmed, which is indirectly confirmed by Mr. X. Now here, if you look this transaction, I call this as A, I call this as B, I call Mr. X as C. Now, A is a buyer, B is a seller. In between, you have a person called C. Let us come back to the definition of this intermediary. Look at this definition. Intermediary means a broker, an agent. Now, broker is a person who gets a commission. Agent is a person who gets a commission, or any other person, by whatever name you call, who arranges or facilitates supply of goods or services. Now, in this example, A and B, C is a person who's connecting B with A. A doesn't know B, B doesn't know A. So this particular case, C happens to connect this B with A. This is what I was talking about, who arranges or facilitates. Who arranges or facilitates supply of goods or services. It could be for goods or it could be for services between two or more persons, but does not include a person who supplies such goods or services on his own account. Like when I say his own account, instead of B supplying the goods to A, B sells the goods to C, C gets the ownership of those goods, and C in turn selling to A. That is not called as an intermediary. I'll come back to my example. B selling to A, then C is called intermediary. Instead, if B selling to C, in turn, C selling to A, this transaction not called as intermediary. This is what we need to understand with respect to intermediary. Now, so why we are discussing so much on this intermediary? Now, the fantastic provision comes over here. Now, Mr. X, who happens to be a in between, we call that as a middleman. This gentleman X gets something as commission. Commission received from B. Now, look at the funda. They say place of supply is like for a moment X is registered in, say I would say he is registered in Kerala. Since Mr. X is registered in Kerala, place of supply happens to be Kerala. B makes a commission to X, this gentleman C, Mr. X, from Toyota, whatever commission he has to get, he gets in, say, Japanese yen or Singapore dollar or US dollar, whatever you name it. This provision, section 13 says that service provider is in India, service recipient is outside India, and this transaction, Mr. X has been called as intermediary. Because Mr. X has been called as intermediary, the place of supply should be the place of the service provider, supplier of service. So having said that, the place of supply happens to be Kerala, service provider is in Kerala. What should be the transaction? The transaction is intrastate supply for the commission income. Now, can I call this as export of service? When I see export of service, refer to your page number 5.6. In page number 5.6, look at this clause, export of service. Clause C, place of supply of services is outside India. Unfortunately, your place of service is not outside India. Now, this is what was challenged in Gujarat High Court, where they said, sir, you are causing undue hardship. The moment it is not an export of service, now why would Toyota pay me 18% GST? Now look at the fate of this gentleman, Mr. X. If he is getting a commission of 5 lakh, on that 5 lakh, 18% is the GST applicable. Do we think that the customer in Japan will pay this 18% GST to Mr. X? No. Mr. X has to pay on an inclusive basis to Government of India. So this is one particular provision where there is a lot of blockage in working capital for the freelancers who are working as an intermediary. Now, this is one provision I would expect to be tested in your examination from your intermediary point of view. Now, we have understood banking transaction, we have understood intermediary. There is one more aspect. Services in relation to hiring of a transport, including a hatch, but excluding a conveyance, that vessel or aircraft, up to period of 1 month. So where the services are provided, where the location of service provider is there, that shall be the place of supply. Examination point of view, expect a simple question. Mr. X hires hatch on rental basis for a period of 20 days. Mr. X happens to be in India. Service provider is there in, say, Singapore. Now, since the service provider is in Singapore and the location of services is in relation to the hiring of a hatch up to a period of 1 month, shall be location of service provider. So that happens to be Singapore. Now, please remember, 1 month should be read as a definition of 1 month. This 1 month is not to be considered as 30 days. Whenever we refer to this term month, refer to the General Clause Act, where I have to read that as a British calendar of how to interpret a month. This is what we need to learn from section 13, subsection 8. Now, let me see quickly if there are any questions before we go on further. There's one question from Surya says we have to apply 12.7 or 13.5 based on the location of service provider, recipient, and not on the basis of this is one important point. Like one of our student called Surya has raised this point. Very, very valid point. Examination. This is one point which is tested from your concepts point of view. Surya says that, how do I know, should I apply? Like we were talking about this example called permission, this admission or conducting of an event. Under domestic transaction, section 12, we need to refer to subsection 7. If it happens to be a cross-border transaction, I need to refer to something called subsection 5. So he has rightly said that, if the service provider and service recipient is in India, then I go to section 12. If one of these two parties is outside India, I travel to section 13. That is how I interpret my place of supply. Your point of analogy is absolutely right, Surya. examination. When you start solving your problem, please put this service provider, Mr. X, Mrs. XYZ Limited, whatever it is, service recipient or seller, buyer. Put these two parties and then go further solving the problem. When you see that service provider is in India, service recipient is outside India, then straight away you'll understand I'll not apply 12, I'll apply section 13. So this is one of the good point which we need to inculcate in our examination. Then moving on, there's one question from Janaki. What if transaction is based on lakhs? If you can refer which example you're referring, Janaki, I'll clarify a little further on this term based on lakhs. Sairam further says, Centel is an MNC which is given an order for event organizing in India for companies' employees. Then what is the place of supply? Okay, Sairam has a question where he was talking about an event which has been organized in India. Then, Sairam, we need to refer to section 12. Service provider is in India, service recipient is in India. Services in relation to organizing a cultural event, etc., where if the services are rendered to a registered person, the place of supply will be of such person. So if the Centel, assuming that they have a head office in Delhi, from Delhi, if they place order, the place of supply happens to be Delhi. This is the answer to your question, Sairam. We need to refer to section 12, subsection 7. This is how we interpret our organizing an event. Further, Namita says, with respect to this Excel file, please upload. Yes, Namita. End of our discussion. This Excel file, every sheet I'll mark with the date where whatever examples we are going to discuss, this will be put onto the ICAI website where you can download that Excel file. All the examples provision wise will be available for you to revise at the time of examination. Now, Janik is asking a question with respect to bank guarantee. What if this bank guarantee is in lakhs? Even if it is in lakhs, bank guarantee, Janaki. Service provider is State Bank of India. Service recipient is a company which is in Singapore. Now, section 13, subsection 8 says that service provider is in India, recipient is also in India. It is in relation to banking transaction. Since it is in relation to banking transaction, location of service provider. Even if it is in rupees, even if it is in foreign currency, the location of service provider is what are relevant for us. Coming back, let's move on to transportation. Now, this subsection 9 and subsection 10 has been clubbed together for the purpose of understanding this particular provision. Now, transportation of goods. Transportation of goods, where it says services in relation to transportation of goods other than by way of mail, other than by way of courier, shall be the place where the destination of goods is meant for. Now here, please keep in mind, transportation when we talk, it is excluding your mail or courier. It is other than mail or courier. That is your aircraft, your vessel, or even satellite per se. There is one circular in relation to this entry called transportation of goods. Now, look at the way the questions are asked under GST law. They don't restrict it to the normal thinking. So when we talk about transportation of goods, there was one entity who is into sending this satellite launching services. Now you all know that there are various satellites which get rotated in the space for collecting statistics or various purpose. Now what if some particular items needs to be sent into a particular location through a particular satellite? There's one private agency who's into launching of these satellites, like not only government. This agency do the launching of the satellite for transmitting some goods. There was a question asked, so what if I do that? They have applied this particular provision and said, based on the destination of the goods, I do this particular place of supply determine. If the goods are meant for outside India, place of supply should be outside India. If the goods are meant to India, the place of supply happens to be India. Now, why is it relevant? Import of services, import of goods. Those two cases, when I say import of services, Service provider is outside India. Service recipient is in India, and place of supply happens to be in India. When we talk about your import of services, this is what we need to keep in mind. If the place of supply happens to be India, then it will be called as import of service. So from that particular analogy, this transportation of goods, they have said this particular analogy saying that other than your mail or courier, where is the destination of goods? That shall be your place of supply. So what happens to with respect to mail or courier? Section 13, subsection 2. Who is the recipient? That shall be your place of supply. Example. Sir, I am in, so there is an example called DHL. DHL is there in India, and say there one of my cousin who is there in US. This particular gentleman places an order on DHL for the purpose of delivering goods from one location to another location. Where the goods are meant for destiny, that shall be your place of supply. So my cousin, let me come to Excel so that you will understand this example carefully. Say, service provider, service recipient. Service provider, DHL. I'll call this as a courier agency. Service recipient, Mr. X in Singapore. Mr. X places a request on DHL for transporting or for moving goods of his parents from Delhi to Bangalore. Now, destination of goods, India. Now, look at your provision. Let me come back to your provision. Services of transportation of goods shall be the place of destination of goods other than mail or courier. Now here, in this example, being courier, this destination of goods is irrelevant. Section 13, 9 does not apply due to courier. Then what happens? I apply section 13, subsection 2. So as per section 13, subsection 2, what it says? General rule, place of supply shall be as per recipient of service. Now, recipient of services is Singapore. Though the service is performed in India, because the place of supply happens to be Singapore, I can call that as a export of services. Now, this is how I apply my section 13(9) other than courier or mail. For transportation of goods. Now, examination. These are the thin lines. Whichever is excluded, that alone will be tested for your exam. So please wait and watch for these exclusion things. Now, it is really not that complicated. If you understand the concept, it is very easy to make an attempt for your examination. Moving further. Services in relation to passenger transportation services shall be the place where the passenger embarks on a conveyance for a continuous journey. Now, I visit to Singapore. I book a flight from Singapore to, say, Chennai. When I book a flight from Singapore to Chennai, service provider is in Singapore. My customer is from India. Service recipient is in India. Place of supply, section 13 gets applied. The passenger who is embarking, that shall be the place of supply. Now, that is how I interpret my place of supply provisions. Now, look at from the corporate point of view. I'll slightly modify this to understand the gravity of your issues. passenger transport service. Passenger transport service. This is ABC Private Limited sends their employee for training to Germany. Return tickets are booked online from Germany to India. Now, service provider, say British Airways, just for a analysis purpose, British Airways is a service provider. Service recipient, ABC Private Limited. Now, refer section 13. As one of the students was saying, how we need to interpret these provisions of section 12 and 13. Surya was referring to this section 12 and section 13. Now, service provider is outside India. Service recipient is in India. I go to section 13. When I apply this passenger transportation service, the place where passenger embarks onto the conveyance, that shall be your place of supply. Because the place of they board in Germany, boarding happens in Germany. So my place of supply happens to be Germany. Now, so why is that so important? Please read your definition of import of service. Please read your definition of import of service, page number 5.7. Supplier of service is outside India. Service recipient is in India. Place of supply is in India. For a moment, if the place of supply happens to be India, all these freight charges, whatever amount this company is paying, they need to pay IGST on these particular aspects. Now here, this is not an import of service. Why? Place of service is outside India. This is how my transactions get evaluated on the basis of this notified list of services. So here, since the place of service happens to be Germany, I need not call that as an import of service. Now, section 13, subsection 9, section 13, subsection 10, we have understood with respect to this transportation of goods and transportation of a passenger. Now, as usual, once they get onto the board or conveyance, so what happens to the place of supply of the services on board? So with respect to services on board, during the passenger transportation, including the services which are wholly consumed on the board, shall be first scheduled point of departure. The place where the point of journey gets started, the first point of departure shall be the place of supply. So as I said, connecting flights, sir, from here, Abu Dhabi to Muscat to Singapore to US. Now, when I have these multiple points, the first scheduled point of departure from where this board or conveyance gets started, that shall be your place of supply. So this is very simple point for us to remember. Next. OIDAR, Online Information Database Access Retrieval Services. OIDAR. Before I start with this, let's have a break for 5 minutes. We are at 8:33. Let us resume back at 8:38 and let us have the discussion. So I'll stop at this here. At this, we'll have a break for 5 minutes. This OIDAR, Online Information Database Access Retrieval Services. Before we start with this, there are a couple of questions. I'll just take up those questions and we'll come afresh to this OIDAR. First question was with respect to the bank guarantee, where Janaki says, so what if this LC is provided by a foreign bank to XYZ PT Limited? Janaki, see, this entity is XYZ PT Limited is a foreign entity. Who is the service provider? A bank which is there in abroad. Now, a bank which is there in abroad and the service recipient is also abroad. Do I extract the provisions of GST law beyond Indian soil? Is that possible? I cannot levy a tax on a foreign bank who is giving a bank guarantee to XYZ PT Limited for an event which is taking place in India. Agree? The bank which is there on the foreign soil, the entity who is receiving a bank guarantee on the foreign soil for a particular event which is happening in India, I cannot forcibly bring them into the levy of GST. Hope you have got this point understood. For the benefit of other students, Janaki says that in case of a bank guarantee, I gave example of this State Bank of India, right? Let me just go back to that Excel file. Yes. So here, this particular Excel file, Janaki has a question saying that instead of SBI, what if it happens to be Mauritius Singapore Bank? I'll call SMB PT. Now, this is a bank which is on the foreign soil. This is an entity which is also in the foreign soil. Definitely, we wouldn't discuss about GST on this particular transaction, right? This is how I interpret. As I said, you look at the service provider, look at the recipient. One of them happens to be in India. Then I discuss the provisions of GST law. Otherwise, not required. Now, next one more question. There is one question from Namita. So can you explain the satellite example again? This provision of satellite, I'll just come back to that section 13, 9. Yeah. Services by way of transportation of goods. Services by way of transportation of goods. So what do you mean by transportation of goods? I need to just on a lighter note, I need to send, there is one advertisement. I don't know how many of you have seen this. By eating that triangle shape, bingo, some biscuits, someone goes to the moon to give that pickle, achar pickle of grandma to a person who is there on the moon, just on a lighter note. Now, if someone has to send these satellites, putting the satellite into the orbit or releasing certain what you call launching pads or your equipment required for the satellite which is functioning over there. I need to put the things into that orbit. That is again called as a transportation of goods. There was one circular issued by the department in relation to this satellite. So they have applied this particular provision. I could have a customer from India where I give this service of transporting these goods. Now, transportation is a service. So if I launch this and release some elements in this orbit, that could be called as supply of service. Service provider is in India. Recipient is also in India. Since the destination is also in India, place of supply is at Mars, where I can call that as a export of services. So this was an example which is there in relation to satellite services. Moving on further, there's one more question. With respect to passenger transport, Will the return journey be treated as a separate under section 12? Yes, Janaki. All return journey will be considered as a separate transaction. Though I did from Bangalore to Delhi, Delhi to Bangalore. Like example, yesterday we discussed on Kanyakumari. I booked a ticket from Kashmir to Kanyakumari, again Kanyakumari back to Kashmir. The return journey will be considered as a separate journey. So this is the answer to your question, Janaki. Now coming back to OIDAR, Online Information Data Access Retrieval Services. Now this OIDAR has attained a lot of gravity under service tax law. Under service tax law, this online information database access retrieval services gain a lot of momentum. Augmentation of taxes, how taxes can be collected effectively, where there is a scope to improvise the base of collection of taxes. Take an example, Netflix, Z5, all this, OTT platform. After COVID has come in, technology has been penetrated so much into our daily life, not a joke. Now people started playing this cards remotely. Skype was used, your Google Meet was used, your any other modem was used for playing. Like you have apartments. When people are staying in apartments, you cannot go to others' house, neighbor's house. So what they did, they had all this meeting through the Google application. Like we have this Google Meet or Play Home. So a lot of applications are there. I sit at my home, you sit at your home. We exchange our communication through online platform. So the way the entire dynamics of business got changed, this aspect called Online Information Database Access Retrieval Service was brought under the levy of service tax. The same thing continued its saga under GST law. So if one has to understand, this OIDAR is a service where information technology, IT is the main backbone. It is a main medium for the purpose of the intended use of service. Now, this needs to have an internet. It needs to have a network. Now, blockchain, data transfer. Now, this all happens through a modem called internet, where this services are rendered on a platform. Human intervention is remote and essentially on a technology. For what? For advertisement, for providing your cloud services. Now, offices, if you happen to see your CA offices, most of you would have seen after pandemic, you're sitting at your home and you have been working. Or even if you have come back to office, all your data earlier used to be in a server. What we used to do? Ping command. I used to run a command called server. I used to take data from my system, which is on the main server. Now they have given a dedicated IP. So what I do? I just log on to that dedicated IP. The moment I go to that cloud, from cloud, I access the files. That's called again providing data through cloud, providing ebooks, providing this software, providing this information over internet. Now all this put together, they have called as Online Information Database Access Retrieval Service. Now, having said that, there's one small definition we need to understand. Reference to this, non-taxable online recipient. Non-taxable online recipient. Section 2, clause 16 talks about this non-taxable online recipient. So why this was brought in? Government needs money. Government needs, let's see, why government needs money? When someone is coming and doing a business on Indian soil, when someone is generating revenue from the Indian nation, the citizens of Indian origin, or from this particular nation, government wants to tax that. Information technology is one particular thing where all sort of these activities, watching movies, playing games, learn online education, or your online platform for your internal meetings, office meetings, etc. All these services, if I provided by a service provider who is there in a non-taxable territory. I use a term called non-taxable territory. We have a definition called India. So when you don't have a reach to tax that particular person through this modern called online database access retrieval service, they have brought in to say any services rendered by way of this OIDAR to a person that is your non-taxable online recipient, the person who is rendering services should pay GST. So who are those people, non-taxable online recipient? They are government, local authority, governmental authority, individual. If these four people are receiving this OIDR services other than for business or commerce, then I call that as OIDAR. So to levy a tax on this, my section 13 talks about identifying a place of service. If the place of service, location of recipient happens to be India, a tax called GST needs to be paid, which is an interstate supply, IGST has to be paid. So how do we get to know that this particular supply attracts GST? How do we know that the place of supply happens to be India? Then the provision says that, look, I have given you a list of things to test. Out of this list of things to test, if any of two things happen, then it is deemed that this is a services rendered to a non-taxable online recipient where IGST has to be paid by the service provider of this OIDAR. So what are those conditions to be tested? First condition, the address which is present by the recipient, whatever address I have given, if it is in taxable territory. Remember, two conditions have to be met. Out of given 7 conditions, if 2 conditions are met, it is deemed to be a place of supply of India. So first aspect, address. Imagine, I need to do a subscription for Netflix. I need to do a subscription for Amazon. I'm not talking about Amazon Prime, what we have in India. For a moment, let us have Amazon or Netflix. These are the service providers outside India. So when I register on that, I need to enter the address. I'll say Praveen, location Bangalore, PIN code, and enter, I'll say India. The moment address is on India, one condition is satisfied. Next, the credit card, debit card, or store value card, or a charge card, a smart card, or any card, whatever be the name, if it is issued in the taxable territory. Now, I use a card for making a payment. This Netflix fellow charges me, say, $10 or $20 for a subscription per annum. So when I make the payment, I have to use a card because when I make online payment, Google Pay or your Phone Pay doesn't work. So I have to use a card. If any of those cards are issued in a taxable territory, then again, the billing address of the recipient of service is in taxable territory. A address was given as taxable territory. C, I have given a billing address as taxable territory. Now, A and C come together. Now, it is not a contradicting. It is joining hand in hand. Any of two contradicting events should be satisfied. So here, if A is satisfied, I need not test C. If B is satisfied, either of A or C has to be tested. Next, fourth condition. The bank of the recipient of services is in an account which is used for payment is maintained in taxable territory. Now, option, I can use a credit card or I can make the payment through any online banking. So if the bank account is from a taxable territory, again, it is called as a condition for testing. Point number 5, the country code of subscriber identity or module used is in taxable territory. Now, like for downloading, I have to give a country code. If it is India, then again, it is taxable territory. Location of a fixed line or landline is also if it is India. Now, I have to download, I get a fax, I get some data through this fixed landline. Then again, it is called as a taxable territory. The last condition, okay, I think the last condition, the recipient of service through an Indian fixed line. Yeah. Out of these 7 conditions, if any of the conditions are met, then I would call the OIDAR. Means out of these 7 conditions, if 2 conditions are satisfied, then we say that existence of online database access retrieval service where if it is given to a non-taxable online recipient, GST has to be paid by the service provider. Little complicated. Examination point of view, just remember address or payment or your banking or your landline dialing code or your location of a landline. If any of these 7 conditions, 2 conditions are met, which are non-contradictory, then it is the OIDI service which attracts IGST. Next, the last fag end of our today's discussion. The last fag end of today's discussion. By framing these particular provisions, there are certain activities which does not get the satisfaction of the place of effective service or enjoyment, effective usage or enjoyment. I'll give an example. Say RAN vaccine or this Covaxin, Covishield. Now you need to have certain activities where the testing, the trial runs, the performance is in India, but the results are relevant for further exploration of a R&D activity. So this subsection 13 says that to prevent a double taxation, to prevent a taxation of a particular supplier of service based on the uniformity of application of rules, government has a power to notify certain services. They notify certain services based on the place of supply, based on the effective use, based on the effective enjoyment. They define that place of supply is outside India. When we refer to the definition called export of services, I was talking about RAN vaccine. See, as you all are aware, any drug which is to be given to a human being, before it is given to a human being, it is tested on animals. They choose a rat, then they choose a particular, another species, a rabbit kind of thing. So they first do the trial runs on animals, then slowly they get advancement in their research, then finally the vaccine will be released into the market. So part of this process, if there are certain agencies which are operating in India, the research is done predominantly in India. The results of that particular research is given to for further testing, for further advancement outside India. Then those are the list of services which have been notified, which have been identified by the government under this subsection 13. How? Based on the use, based on the enjoyment of that service, they define place of service happens to be, though in India, for the purpose of export of service rules, they say this is a export. Now, as of today, for this enjoyment, effective user enjoyment, there was one particular list of 10 activities identified, like integrated discovery and development, evaluation of efficacy of a chemical or biological entity on animal or disease, evaluation of a biological activity, novel chemical, biological entity, drug metabolism, new chemical entities, safety assessment, toxicology, stability study, bioequivalence, clinical trials, bioanalytical studies. Now, these are all the notified activities which are notified saying that the place of supply happens to be a non-taxable territory, right? Supply of services from the taxable territory as per a contract within the service provider is in India, service recipient is outside India. Such supply of services fulfill all the conditions except place of service, place of supply, that is export of service. Then they say all this list what I have given, I deem that the place of supply happens to be outside India. This particular notification has defined all those particular list of services. In addition to that, any maintenance, repair, or OLA services for aircraft engine, or components or parts thereof, the place of supply shall be location of recipient of service, like British Airways when they come into India. Part of the flight, when they have to return back from Mumbai, if any service or repair conducted on that particular components, if you remember section 13, subsection 3, this particular section 13, subsection 13 overrides that 13.3 and says that place of supply shall be location of recipient of service. Similarly, when we talk about aircraft, the question comes is what happens to the ship or a vessel? So if there is a ship which is coming from Mauritius to India, if there's a ship which is coming from Japan to India, all those services which are received on that particular ship in relation to repair or maintenance, it is seen that the place of supply happens to be location of recipient of service. So this is how we apply the provisions with respect to place of services in relation to cross-border transactions. I understand that today's discussion, couple of things are little technical for you to understand. I would say that the nature of transactions are so complicated. We need to understand from the given practical business point of view where we need to apply these provisions in such fashion. Now we have a couple of minutes before we wind up. I have discussed section 10, I have discussed section 12 in connection with domestic transactions. I have discussed section 11 with section 13. Section 11 deals with your goods, section 13 deals with your services. Now, these are the four subsections, these are the four sections which cover the place of supply provisions, how we analyze. As I have discussed, I have given a couple of examples for us to understand from examination point of view. There was one Word file which was posted on ICAI website. Please go through that Word file for the questions which are there for to test on entire this discussion on four sections. Tomorrow, we will place this Word file with the answers to those questions with respect to examining the place of supply provisions. We have the next session continuation to this in relation to identification of time of supply. So till then, please read these particular provisions and come well prepared. Next session, we will meet again on discussion on time of supply provisions. Till then, see you all. Good night. Stay safe. This side.